if you had to put a value on gold and silver after the crash in today's dollar denomination, what would it be?
I think you're probably asking me two different things here. So I'm going to answer that in two different ways. Okay, number one, and I haven't done the calculation recently, so I know it's higher than this, but the true fundamental value where they do the reset today is probably somewhere, I know for sure it's north of $15,000, probably way north of that if we actually knew all of the debt.
Yeah,
so
based upon your normal, just real quick, based upon your normal calculations, not including all the debt, but it was I think the other day it was like 12,500 something.
Okay, so that is it in nominal terms. But the most important function of gold is to hold your purchasing power over time. So if you could buy a suit of armor 1,000 years ago with 1 ounce of gold, and you could buy a really nice suit in 1900 for $20 or 1 ounce of gold. On the other side of this, you should also be able to buy that men's suit. And you can still do it even at the level of 65. And I don't buy men's clothing. Can you get a decent suit for that, Eric?
For sure.
Okay. So the whole point of the most important point of gold is to hold your purchasing power over time, whatever that new nominal number is for the new currency. But you see, we also have a huge advantage right now, and that is a rising gold price indicates a failing currency, and they don't want you to know that the currency is failing. So, in theory, and this is just a theory, you've got gold money over here, and you've got the government-based fiat money here. So it's really, if they're both money, you got good and you got garbage. And so in theory, and that's what you're seeing because these are just spot contracts, it's not real gold. What you're seeing is the dollar getting stronger, gold getting weaker. But the reality is you're not seeing the dollar getting stronger because the inflation tells you how much weaker the real dollar is, right? So, you have to look at the whole thing. So when you ask me, well, how much is it going to be in nominal terms? First of all, there is no person that's going to know how big a devaluation is going to be. They could do, and it really is going to be based upon the level of debt that needs to be paid off, right? Paid off so everything gets reset like we were talking about earlier. That number could be 20 trillion for all I know by the time they do it. But the number is irrelevant.
Right. I like the way that you said that because that's important to understand. It's that it has a value, it has a purchasing power now, and that purchasing power should hold regardless of what the actual nominal dollar amount is, right?
Exactly. So you don't buy gold and silver as a trade. You buy gold and silver as insurance to make sure. But we do have some opportunities because it is so suppressed. It's like a spring, right? You hold your hand on a spring, and then when you release it, that spring is going to shoot in a direction. Nominally, whatever that number is what that number is. But we have that opportunity to actually increase our wealth because of that suppression. So you take advantage of it.
Yeah,
and that's what central bankers are doing. They're taking advantage of what they're creating here.
Even if it wasn't like a spring and it wasn't suppressed, right? Let's just say we took that off the table because other assets are gonna drop so much during hyperinflation while gold holds. Even then, you have opportunities, even without it being a spring, right?
Yes.
So it's a win. It's a win either way.
Correct. Yeah, you're absolutely right, Eric. And we also have to see what fiat money products are actually going to survive. I don't think many will. I think, hyperinflation is about burning out the garbage. And there's so much garbage in the system right now because it's all trading. It's all Wall Street trading. It's hard for people to understand, but why would you risk your wealth with a Wall Street trader?
If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.